A very good afternoon to you traders. Mark here from the day trading room, 20 to 5 Sunday afternoon. One thing that strikes me is that many traders turn up for trading day completely unprepared for what they're about to do, for the job that they're about to undertake. Now, of course, there are a lot of traders out there who do prepare, and they do take time, they do their homework, they spend hours looking at the charts, analysing the markets they're trading, analysing themselves, analysing their prior performance, and actually over time they're the ones that you see tend to have the consistency that they're after. It's by no means a magic bullet, but they tend to be focusing on the right things at the right time and improving on the right areas. So what sort of thing would you do to prepare if you're trading, let's say the ES? You're an ES trader, the ES is about to open. What sort of things would you be looking at as an intraday trader of the index futures like the ES? Well, let me give you some examples. Imagine here I've got a 15-minute chart in front of me. ES, at the time that the US market opens in UK, is 2:30. So let's say you're at your desk midday, or 1 o'clock, something like that, and you are preparing for the trading day. What are the first sort of things you're going to do? Well, the first thing you're going to do, the first thing that I like to do, is have a little quick look and see what the news is coming out. What news has been out? What news is coming out? In other words, data. What are the major headlines? Now, I'm not saying you have to follow everything, but you just have to be aware of what's driving the market. What's the current engine behind the market? We've had times where it's been, crude oil. We've had times where it's been the Japanese yen. Specifically when we had the nuclear incident, crude oil with the oil crisis a few years ago. We've had it's emerging markets at the moment. We've had China. We've got a bit of China at the moment. Taper, of course, at the moment. It could be anything. Europe, the Europe crisis. Greece and the default and the bailout, and all that sort of thing. So it varies from month to month, or quarter to quarter, of what's driving news. And they don't have to be completely, knowing every single thing that's going on about it, but you have to understand what's driving the market. So that if something surprise comes out, let's say that China, let's say that oil is driving the market at the current time you're watching the market, and the oil price suddenly moves dramatically, you can, even if you're not an oil trader, you can say, okay, well, I know a lot of people are watching that, are concerned about that. How is that going to affect the instrument that I'm trading, the ES, or whatever that may be? Or, if you're keeping an eye on the European news and it was the Greece bailout situation and news comes out that they're in trouble, they're requesting more money, you know that it's just a negative pressure on the equity markets at that moment in time, just because everyone's watching it. So news is the first thing that I'm looking at. Second thing is any data coming out, any risk events like data, Fed speakers, or anything like that. So I always keep an eye on that, what has come out and what's due to come out, and set your alarm so you don't get caught out by it. This is what we do in the room all the time. If there's data coming out, we fire out a 2-minute warning in the trading room so that no one gets caught out by it, because there's no real excuse for that at all, getting caught out by data. So set your alarm for that. The third thing I like to look at is what the overnight session's done. And I like to do it manually. I like to look manually. I like to start with just a naked chart like this. Let's say we're using the ES as an example. It's a 15-minute chart. I like to say, okay, let me see what's been done. So overnight, at this point in time, we're just coming up to the open, about an hour till the open. I say, okay, where have we been? Okay, we've got a high there, so I mark it off. I'll mark off the low print there. I'll see how many times we've tested that low, how solid that low is, and how it relates to the prior day. So I can say, okay, we've tested it 3 times already today. We've only tested the high once and maybe twice. But I could say, oh, it's interesting, we've had a little bit of support there that's held 3 times in a row and has pushed off from it. Now, how does that coincide with anything from yesterday? Is it a fresh level, or is it a level that's been in play yesterday? And already we can see on this day that we're looking at as an example that the prior day was resistance and it became support towards the end of the day. So I start to say to myself, okay, it's now resistance, it's now become support, and we haven't traded below it since 6 o'clock UK time yesterday. So I start to build a little bit of a picture in my head, just what the overnight trade's done, how it relates to yesterday. Then the other thing I do is I say, okay, what's the overnight range? How much volume has been done overnight? I haven't got a volume on this particular chart, for example, but I'll look and see how much volume, the total volume as comparison to what's normally done, the total range. Just trying to gauge an overall picture of what's happened overnight, who's potentially in control, and even if we're range bound, where haven't we gone? Where haven't we gone sometimes gives you more information to where have we gone. And this is an example here, we haven't gone under that low overnight, and we can extrapolate that back. Then the next thing I'll do is, when I've looked at the overnight session, I'm going to start building some more levels on my charts. Now, personally, I don't like to have too many levels. I like to have just a few key levels. I don't have many. Some people like to have lots of lines on. Fair enough, whatever works for you. Personally, I like to just have a few key levels. So just eyeballing this chart here now, I would have a massive level down here and say that's a big support level. 1, 2, 3, 4 bounces off it, if not more. And I would probably, if I had the functionality to, which I do, I would thicken that up to just denote that it's a decent level. And the same now, that actually has become a decent level there. It happens to be the overnight low, but for me, I can see the amount of times we've tested it and how it's come into play. I would make that a decent level as well. So I would, make sure that's clear on my charts. Then I would look and see, what the expected ranges of the day, and you can use that with your own calculations, or you can use something like an ATR on a 20 period, a 10 period, to give you the current range, average range of the day. And then from there you can say, well, how far to the upside is that if we opened here? And you can start to mark that off in your chart. So there's a guy in the chat room who likes to do that. He puts his range in, he works out where his range is going to be potentially, and so any of those levels between from that point, as if assume it's a trend day and you do the average range to the upside. Let's say your average range is let's say it's 15 points on the ES, 15 handles on the ES. So we'll take a 65, and to the downside that's going to take you to 35. Okay, just an example. So then you can start to mark out, okay, any point from there to there, then levels come in play. If we start open here and we drive 15 handles, then we are going to come into all the levels that potentially are between there and that point there, similar to the downside. So there's no point in overdoing it, and okay, we do get extreme days, but there's no point in doing your levels really far out. You're just looking for what the likelihood is of the current day scenario. So you can start to say above here starts to become higher than average, and below here starts to become higher than average range. So you're starting to look for stuff in between there. So you can then say things like, oh, this level starts to come into play now. Or we can say this cluster of volume done here and here starts to come into play, so maybe we're going to stall at that point there. Just starting to build a picture. You get the idea. So then once I've done all that, I'm going to then look to see what the opening type is going to be, where the opening print actually becomes, where we open. Do we start to push up just before the opening print? Do we start to push down? And just getting a feel for all the current situation, where we are. So I've got my levels, I know what's driving the market, I know what the engine is, I know the expected range of the market, I know what any risk events that are coming out in the trading day, and then I can formulate a plan. And when it comes to formulate a plan, you don't have to be saying I'm just going to go long, I'm just going to go short, but you can start to create some ideas in your head, just jot some things down to both sides. Maybe you have got a specific bias. There are days when we go into the market and we've got a very negative bias or a very positive bias, depending on the overnight action or the prior day's action. But you can start to formulate some sort of trading ideas. If we get to here and stagnate and push lower, are you going to follow through with a short, or are you going to look for it to wick and bounce the upside? And just having those ideas written down and just having them in your head, right or wrong, gives you a way of comparing what the current market action is against some of your ideas and some of your plans. Now, if you don't have a clue, you look at the market like this and you're saying, I don't know what it's going to do, I've got no real idea, that's absolutely fine. I do that all the time. And I write down, okay, let's watch the first 30 minutes and we'll see who's in charge. And then you can redo your assessments. Where have we got to? How far have we driven in the first 30 minutes, or first 15, or first hour, whichever metric you prefer to use. Where have we been? What have we done? And who's in charge? Is it still mixed? Am I now starting to develop some sort of plan and some sort of feel? So those are just some of the things. I think preparation is essential. Not everyone does it, but I don't think you can expect to go in and start to improve your trading and consistency if you don't have a process in place that you're doing before every day. So something I do, something I know a lot of great traders do, and I think it's a good idea. Anyway, next week should be very, very busy. Loads of great stuff going on. A quick shout out to one of the guys in the room. I won't mention any names. Very good trading last week. 3 record-breaking days for him, and I think one of his best weeks he's had since for a long, or since he's been trading. So, congratulations, and it just shows, the homework he does, preparation he puts in. Is really starting to show, and it's good to see. So, good trading, guys. Keep the risk managed. It's a volatile market at the moment. It's two-way action, so be aware of where your risk is, and capital preservation number one. Have a great week.